All right, all set. Thank you.
You're
All
welcome.
right,
Thank you.
I'll just thank you everyone for being here today. Today we have Letty Perez, who is with Pivot Health, and she's going to be doing some product training for us. Letty, are you training on Pivot or Hooray today?
No, actually, I was going to do pivot. I wasn't sure.
Okay.
I apologize if
Okay.
it was supposed to be hooray
No,
today.
no, that's good. We can schedule Hooray for the next one.
Okay, sounds good. I figured we had quite a few new agents contracted.
Yes, good point. All right. Well, everybody, thank you again for being here. Letty, if you want to, you can go ahead and start.
Thank you so much, Len. Good afternoon, everyone. My name is Letty Perez, and I am your broker account executive here at Pivot Health. So, thank you for joining and for learning a little bit more about Pivot Health. Just a little bit of background on who Pivot Health is. We are not an actual insurance company. We are a product development, marketing, and management company. So we design the products, we bring them to market. And I share this only because I want to make sure that everyone understands that your clients should not be telling a provider or a facility that they have Pivot Health insurance because we are not the carrier. So just that's just a little bit of background on who we are. We actually have carriers that insure the plans for us. I wanted to start out today with a little bit of product positioning. For those of you who are new to the industry or new to selling short-term medical plan, just wanted to share a couple of different points on the difference between an ACA plan and a short-term medical plan. So, with a short-term medical plan, the pricing, the premium on the plans are not going to be based on their income. Short-term medical plans are not going to be for everyone. These are for healthier people. There is a simplified underwriting that they have to be able to go through in order to be eligible for a short-term medical plan versus an ACA plan where everyone has to be accepted, regardless of their medical history or their current conditions. With the ACA plans, they are designed more so specifically work in the states where the product or the plan was issued. With short-term medical plans, obviously the plan has to be available in the resident state where the client resides, but the plan can be used anywhere throughout the United States. So a little bit more flexibility and mobility with the short-term medical plans. And then we have plans that use national networks, but the majority of our plans are open access plans. So it gives the client much more freedom to go to whatever provider or facility they see fit for their needs. And then with the short-term medical plans, a client can purchase a short-term medical plan anytime during the year. There is not going to be an open enrollment period like an ACA plan. So once open enrollment is closed with the ACA plans, I'm sure you all are familiar with that. They would have to have a special life event in order to enroll outside of the open enrollment period. A short term medical plan can be sold today with an effective date as early as tomorrow. So lots more flexibility. But again, there is going to be a simplified underwriting. Not all conditions are going to be covered. They are not ACA compliant. So, for example, one of the main exclusions on a short term medical plan is maternity. So, just to give you a little bit of background on short term medical plans. So, as you start getting leads and start working with clients, we just want to give you a couple of ideas of who are going to be those the people that would best fit um, for a short-term medical plan. So when you're working with a client, some of the things that may ring a bell when you're talking to them or going through questions with them. So you have part-time workers that are not eligible for a group plan. We have people that is which nowadays is a very large population of what we call our gig workers. So these people are going to contract out, they're going to be 1099 employees, and they're not going to get offered any type of a group coverage. We have those early retirees, which happens to be our largest market segment. That's 60 to 64 and 11 months of age. Those people that have decided not to wait till they're Medicare eligible in order to retire, and then now have left themselves without coverage. So for those healthier people in that age band, the pricing on the short-term medical plans is going to be much more competitive than a marketplace plan for that age. People who have lost their jobs or have quit their jobs, or they have found a new job and are on that maybe 90-day waiting period before they can uh, sign up for the employer coverage. So this is perfect because you can sell a short-term medical plan for as few as 30 days of coverage. So that could fill that little gap there. And then you have those self-employed people that maybe don't have enough employees to offer a group coverage. So they're looking for coverage for themselves and their families. Those college students that have either not found a job yet, they're not on their parents' plan anymore. Now, these plans work. So if they're on their parents' coverage and they come off at 26, you can offer them a short term medical plan. And then those families who are healthy, but maybe do not qualify for a subsidy with a marketplace plan. So the premium may be very expensive for them. This might be a great option. So just want to go over when you log into your Pivot Health portal, when all of you get contracted, you're going to get a welcome email from Pivot. It's going to have your Pivot number in it. You're going to use that to get logged into your Pivot agent portal. In there, the proprietary products that we currently have that will display would be your short-term medical plans, which of course are going to be available up to the age of 65. And then you have a dental and vision plan that's going to be available as either a standalone product or as a add-on product to the short-term medical. Nice thing with our dental plan, there is no maximum age. So they can keep that dental plan till they turn 100 years old if they choose. The supplemental plan that we offer is only going to be available as a check the box. So you will not have a tab to run a supplemental plan, quote, standalone. It would have to be as a check the box when you're selling a short term medical plan. But do keep in mind that if the client enrolls in that supplemental product, when the short term medical plan expires, they can keep that supplemental plan until they turn 65 years of age because they can use it alongside any other coverage. So, I want to give you some highlights of what makes the Pivot Health short term medical products unique. You are going to see when you get into your quoting portal that there's going to be a lot of different plan options. And there's so it's going to vary based on the benefits that they're looking for, as well as the price points. We do offer extended durations. So, what an extended duration means is that the client signs up today and they get more than one policy coverage period. So, they can get a 2 by 180 day, 2 by 364 day, or a 3 by 364 day coverage period. So, because our plans do have a simplified underwriting, so they do have to qualify when answering the application questions. So, when they sign up for an extended duration, they don't have to go through those questions again for the next coverage period. So, there's no new pre X look back, no new waiting periods, and all the benefits are going to reset with each new coverage period. So their deductibles, their coinsurance, and the benefit maximums will restart with each new coverage period. About 2 weeks before their existing coverage period ends, they will get an email reminding them that they do have to download new ID cards because it is going to be a new policy with a new ID number. And keep in mind also, the benefit maximums on the Pivot short term plans are not a lifetime maximum. So if they happen to be on an extended duration plan and they selected $1 million total coverage, and say during their first coverage period, hopefully not, but let's say 6 months into that plan, they're diagnosed with a cancer and they max out, their out of pocket expenses and they go through maybe $600,000 worth of their maximum benefit on that first coverage period. When their second coverage period begins, one, we have to continue to cover anything related to that cancer. We cannot exclude it as a pre-existing, and all their benefits would reset, including that $1 million total coverage. Nice thing is we have level commissions, so you're going to get paid at the same rate for all three coverage periods. It does not reduce in year 2 and year 3. And we have our companion life plans. So if you're offering a companion life short-term plan with an extended duration, the premiums are also going to be rate locked. So they'll know what they're going to be paying for the next 3 coverage periods. We've included preventive and wellness benefits on all of our plans. And we have those plans with open access, so no network restrictions. And then again, the plans are simplified underwriting. So they only have to be able to answer no to all the application questions in order to be to get the coverage. So we're not going to take the application, submit it, and then, get back to you and the client a couple of days later, letting you know that they were not issued, that they were declined. We do not have rate ups on our application, so there's not going to be a tobacco use question. We also do not have a height and weight chart on our plans. We only have a weight limitation. So a female cannot be over 250 pounds, a male cannot be over 300 pounds. We also accept controlled diabetes, which means that they cannot be on any type of insulin or any type of medication for diabetes. It would have to be controlled by diet and exercise only. We also do not ask for a social security number. So if your client is not a US citizen, they only have to be able to answer that they have resided in the US for the prior 4 months. We do not require any type of documentation. We have added Point Health it's a patient advocacy service to all of our open access plans. So these are the plans that don't have any networks tied to them. So if the client wants assistance with finding a provider or a facility in their area for a specific need, they can reach out to Point Health. And Point Health, but by providing them with their app ID number and their zip code and the services that they're looking for, they can help navigate and find a provider in their area that'll work best with the plan. Point Health is also available to help with bill negotiations on behalf of the client. And Pivot is known for designing products for certain niche markets. So we cover student athletes. So that's high school and college athletes are covered on our plans. Our child only policies, again, can be as young as 6 months of age. Now, if you're doing multiple children on one policy, the youngest child cannot be under the age of 6 months. If you have a baby that's under the age of 6 months and they're needing coverage, they would need to be included with an adult on the plan. And again, as I mentioned earlier, our largest market segment still till today is that pre-Medicare market, that's 60 to 64 and 11 months of age. So right before they turn Medicare eligible. And all of our plans include free and unlimited telemedicine. And the telemedicine services do include dermatology. So you want to make sure that when you're offering a plan to a client, if they're being price conscious on the premium, you can offer them a plan that maybe does not include office visit copays for those sick visits, because they do have access to that free and unlimited telemedicine. So you want to make sure that you remind them of that. We currently have 2 carriers that insure our short-term medical plans, and they are both A-rated carriers. So when you log in and you start your quoting, we have 4 different types of short-term medical plans available today. We have our core plans, which we consider a light short-term medical plan. And also that is going to be considered a passive PPO plan. So that means that the clients on a core plan can utilize a First Health Network provider but they are not limited to that network. They can actually go to any doctor or any facility and will treat it as an open access plan. But I am going to go over the core plans in a little bit more detail because they do have some hospitalization benefit limitations that you want to make sure your client is aware of. Our classic plans are all open access plans, no network restrictions. And these plans are going to allow the most plan options when you're in your quoting portal. Our Epic plans have two different plan designs. One is going to be a PPO plan that utilizes a Cigna network, and the other is going to be an open access plan with no connection to that Cigna network at all. And then we have quantum plans. The quantum plans are a true PPO plan that utilize a Cigna network. And of course, the benefits will reduce if they go out of network. Our quantum plans are very rich in benefits. So the core plans are underwritten by Companion Life Insurance Company. Again, that's one of our two carriers for our current short-term medical plans. And I keep mentioning current because we are going to be adding another carrier to our portfolio here in the upcoming weeks. So the core plans have low deductibles, low coinsurance out of pocket, maximum coverages of 750,000. You have the option of offering the core 2000 plan with RX coverage with copays, no RX deductible. But keep in mind that any of the plans that you offer with the copays for the RX coverage, they are going to max out based on the duration of the plan. So if the plan is up to 6 months in duration, their RX benefit will cap out at $1,000. If their plan is up to 364 days, the benefits would max out at $2,000. Now, keep in mind, if you sell an extended duration, all those benefits would reset with the new coverage period. These plans offer office visit copays. So these are going to be for sick visits. These do not include routine or wellness visits. It's $30 copay for a primary doctor, $60 for an urgent care or a specialist. It is maxed out at 3 visits per insured per coverage period, and it is combined. So not 3 in each category. So if they went to a primary doctor once and they went to an urgent care 2 times later on, they would have used up their office visit copays. Should they get sick a fourth time and need to go to a doctor and opt not to use their free and unlimited telemedicine, that visit would go towards their deductible and coinsurance. Now, the I want to make sure everyone pays attention to this. The limitations on the hospitalization benefits on these core plans, and the core plans are the only plans that have these limitations built in. So if your client were confined to a hospital, the plan would cover up to $1,000 per day. That includes room and board, nursing services, and any other miscellaneous charges. Anything billed over that $1,000 would be considered not covered by the plan. So you want to make sure that they're aware of that. And for this reason, for this limitation, the majority of the clients we see on the core plans tend to be that younger age band where they don't feel as much at risk of needing to use hospitalization benefits, or under the age of 30, a lot of child or children only policies because they do have some good everyday type benefits. Now, of course, you're free to sell it to someone that's older. You want to make sure they understand that there may be some additional out of pocket exposure, or you would want to maybe stack it with a good indemnity product that would help with that out of pocket exposure should they be confined to a hospital. These plans offer that one wellness or preventive visit. It is going to cover up to $200 towards that visit. And it is going to be with a primary doctor, a routine type of checkup, like an annual physical. Um, in that category, OBG visits for a female are not covered under that wellness or preventive, even though that could be their, their annual checkup. that is going to be subject to deductible and coinsurance. Same for routine childcare services. It is not covered under that $200 preventive or wellness benefit. That is a separate benefit. It is going to be subject to deductible and coinsurance. But childhood immunizations are not going to be subject to the deductible. So they would only be responsible for their coinsurance for those immunizations. So there are a lot of good benefits on the plans. You just want to make sure that the client understands the limitations on the core plans. With the classic plans, these are going to be all open access plans, so no network restrictions whatsoever. They can go to any doctor or any facility. And these plans are going to offer you the largest array of plan options, deductibles ranging from 1,000 all the way up to $10,000, maximum coverages from 100,000 all the way up to $1 million. Now, just a reminder, so classic plans are also underwritten by Companion Life Insurance Company. If you are looking for a plan with those office visit copays, like I described with the core plans, that would be a choice plan or a deluxe plan. The other plans, those office visits would be subject to deductible and coinsurance. All of these plans also offer that one wellness or preventive visit, and that would cover up to $200. If you're looking for prescription coverage with those copays, again, that maxes out based on the duration of the plan, you would want to offer a standard or a deluxe plan. The other plans will only offer a discount card. So these plans, again, when you go into your quoting portal, you're going to see that you have a lot of options. You can toggle between the benefits and adjust them accordingly based on what the client is looking for and maybe their budget. The Epic plans are the only plans we offer today that are underwritten by North River Insurance Company. There are two different plan designs with the Epic plans. You have the Epic PPO that utilizes a Cigna network. The Epic Base is an open access plan, like our other plans. No network restrictions. They can go to any doctor or any facility. The middle column here, and this is a screenshot of the brochure, is simply showing that if they are on that Epic PPO plan and they go out of network, how their benefits would differ. They would either reduce or they may lose some benefits. The Epic plans have become very popular since we rolled them out because they are 100% coinsurance plans. So once they satisfy the plan deductible, their max out of pocket would be satisfied. Then the plan would kick in up to the maximum benefit. They do have a preventive or wellness exam on the Epic plans. There is going to be a 3-month waiting period to utilize that service, and it is going to cover up to $100, where the classic plans and the core plans cover up to $200 towards that one wellness or preventive visit. When offering an Epic plan, and you may not see both plans offered, both the Epic PPO and Epic Base in some states. So just make sure that you're aware of that. It's not a mistake. Some states do not have the PPO plan available. But when you are selecting these Epic plans, you are going to see that the plan is always going to be listed twice. Your first option does not include RX coverage with copays. The second option will include the RX coverage with the copays. So that's going to be the difference between the two plans. Also, when you are selecting an Epic plan, you are going to see at one stage during the quoting and enrollment process that there's going to be a supplemental accident rider that can be selected. The benefit will either be a $5,000 or a $10,000 benefit. They can select this, but they need to do it at the time of enrollment. We cannot go back and add it on once the application's been submitted. We also cannot remove it once the application's been submitted. That benefit will cover up to that dollar amount should the insured be injured in a covered accident and require medical attention within 72 hours of the accident. And again, just a good reminder, the Epic PPO plan uses a Cigna network. Epic Base Plan is open access with reference-based pricing, no network restrictions whatsoever. So for those of you who are not familiar with reference-based pricing, so for the open access plans, our classic plans, the Epic Base, and the core plan, we categorize it still as an open access because it is a passive PPO. They do have the option to use a First Health network on those core plans, but they're not restricted to it. So essentially, what this means is when covered claims come in, Pivot will pay based on Medicare allowable or usual and customary charges for that covered service. So for a provider, we will pay up to 125% of Medicare allowable. For a facility, we'll pay up to 150% of Medicare allowable. Overall, the average discount's about 69%, even steeper than a PPO plan offers. Now, your client, this is not a reimbursement plan. The client should be presenting their ID card. The provider or facility should be filing the claim with us. We will make the adjustments to the claim. Their EOB would show what was charged, what discount amount was taken, and what their responsibility is. And these open access plans come with balance bill protection, which means that if the client receives a balance bill due to the discount that we took, they have the right to send that in to us. We are going to settle out that balance bill on behalf of the client. So while clients may think, oh, there's still out-of-pocket expenses, meeting deductibles and coinsurance, but they have the advantage of that they are going to get the benefit of having those claims repriced, helping save money while they're satisfying that out-of-pocket expense. And then again, with the open access plans, that patient advocacy service, Point Health, just remind the clients that when they sign up on an open access plans, they have access to that service. It is free to them. It is included in their plan, so they don't have to pay for those services. And you'll notice too in the quoting portal that the open access plans tend to be lower priced premium wise because there's no provider access fee that is charged when they're using a network. Then we have that Cigna network on the Epic PPO plan and the Quantum plan. And then we have as an option the First Health network available on those core plans. But again, it is a passive PPO, so the benefits remain the same whether they stay in or out of that network. The Quantum plans, these are also underwritten by Companion Life Insurance Company, very rich in benefits. Both the high deductible plan and the copay plan utilize the Cigna network. They're both considered PPO plans. And if you notice, the third column shows how their benefits will reduce or they'll lose benefits should they go out of network. These plans are going to have a $10,000 out of pocket maximum, which will include the plan deductible. If they select the PPO copay plan, they're going to get those 3 office visit copays. They'll also get prescription coverage with the copays. And if, again, the benefit will max out based on the duration of the plan for that RX coverage. Both plans offer the one preventive or wellness visit. With the Quantum plans, it is going to cover up to $250 for that one wellness or preventive visit. Again, with a primary doctor, not an OBG visit and not a routine child visit. The Quantum plans include a supplemental accident benefit. So it's not a rider that needs to be selected like with the Epic plans. It is going to cover up to the plan deductible for any expenses incurred if the insured were injured in a covered accident and required medical attention within 72 hours. So very rich in benefits. Just keep in mind it's insured by Companion Life and it just has the Cigna network. The ancillary products I mentioned earlier. So the Brilliant Dental plans, eligibility on the dental plans is going to be a minimum of 18 years of age. There's no maximum age on the Brilliant Dental. Now, keep in mind if you have a client that has children, and they want dental coverage for them as well, the children can have access to the benefits, but they would need to be included with an adult on the plan. So this product is insured by Renaissance. It is a PPO plan. We have three plan options. There's a value plan, which is basic coverage only, and there is a 6-month waiting period for those basic services. The essential and the maximum plans do include major services, and they are progressive. So those benefits will increase from year 1 to year 3 and then stay level for the life of the plan. And again, if you're including children on the plan with an adult, you'd want to offer them the maximum plan. That is the only plan that includes child ortho benefits. There's going to be an option to add on a vision coverage when you're selecting the dental. There's going to be only one choice. It is through Vision Care, and the vision is not available without purchasing the dental. The Latitude plan is through an association called Communicating for America. And this is the plan that I mentioned would be available when you are selling a short term medical as a check the box. This is a bundled product. It's an accident, critical illness, hospital indemnity, and accidental death and dismemberment product. There's going to be two plan designs. One is a select plan with a $2,500 benefit, and the preferred plan has a $5,000 benefit. The nice thing about these plans are they do not coordinate benefits with any other coverage, and the benefit is paid directly to the member so they can use that money to reimburse themselves however they see fit. And just a reminder, so it's not going to be available to be sold without the short-term medical, but when the short-term medical expires, if the client has not turned 65 yet, they can keep that Latitude plan. And let's say they decide to go on a marketplace plan because their health has conditions have changed, or they go on a group plan, they can keep this Latitude plan because again, the Latitude plan will not coordinate benefits with any other coverage up until they turn 65. So once you get your Pivot welcome email, you're going to have your Pivot agent writing number. You're going to go to www.pivothealth.com, and this is going to be the page where you're going to select for agents. It'll take you to the next page, and since you are already appointed with Pivot, you would click on the login and register into your agent portal. Once you're logged in, this is what your landing page is going to look like. Product portfolio, if you open up the little down arrow, you're going to have access to all of the plan brochures that I just went over. Helpful links is going to have marketing material and training material for you as an agent. And then, of course, my book of business is going to have a listing of all the business that you sell once you start submitting business. On this first landing page, you do see down here, there's a state availability chart that will tell you what products are available by state. Also, there's a chart with the durations that are available because, of course, that will vary by state. And there's also going to be a little cheat guide there with some states have very specific rules on reapplying and durations on short-term medical plans. If you click on get a quote or start your quote now, it'll take you to the next page. And you're always going to start with the zip code. This allows the site to only display the products available in that state, as well as the durations available. All fields are required with the exception of the email address. I would leave that blank. If you do enter your client's email address, the site might start sending out automated emails to the client thinking that they were shopping on their own. If you're including a spouse or children, you want to make sure you do that on this page. That is going to affect the premium of the policy. Desired start date. If I was live on my portal right now, we would be seeing March 19th, 2024 as the earliest effective date. The little calendar on the right-hand side will allow you to select a date as far out as 60 days from today. But do make a note that whether the policy is going to start tomorrow or 30 days out or 60 days out, they are going to get charged for their initial 30 days of coverage immediately upon submitting the application. And then, of course, once the policy is active, their first 30 days would be already paid for. And then their next charge would be on their effective date each month the following month. If you know that the client only needs 180 days of coverage, I would change that on this page. That is going to, one, affect the premium, and it'll also give them the option of prepaying for that 6-month policy. If they do that, they will get about a 25% savings on their premium. Now, you may say, well, what happens if they end up canceling month 4 and they didn't utilize the whole 6 months? Do they lose the money they paid for it? No, we prorate refunds, providing there are no outstanding claims on the policy. So here, the site will always default to the longest duration. I've used a Florida zip code. You click on Find Plans. The next page will have 3 recommended plans, but make sure that you note that these have already had the extended durations selected. So if the client is specifically not looking for that extended duration, you would not want to pick one of these 3. These are going to be listed below, and then you can make the adjustments accordingly. If there are certain benefits that the client is looking for, you may want to use the Show Filters feature. That will allow you to start eliminating plans that do not fit your client's needs. Or you can simply scroll down the page and see a listing of all the different policies that are available to offer to the client. These are the boxes that I mentioned where you can adjust the benefits based on what the client is looking for. As you make any of these adjustments, your premium is going to adjust accordingly. This feature here of view details with the eyeball, I highly recommend once you select the benefits that the client's looking for, you can click on the view details and it will give you a very specific breakdown of what coverages the client is going to get, including exclusions and limitations. This page also allows you to collect up to 3 different plan options so that you can send it to your client in a chart format. So you would just click on Add to Compare after you make whatever selections you're looking at and send them up to 3 different plan options. The next page, here I've selected as an example a Epic base plan. This one does include the RX coverage, and it'll say it again, prescription drugs with copays. And this is what the durations would look like. And this is in the state of Florida. So North River only allows a 2 by 364 day in Florida. If this was one of the companion life plans, it would be 3 by 364 would be the option. And keep in mind, it is noted which carrier is covering the plan that you're offering. If you want to go ahead and add on some ancillary products, this is what it would look like once you select it. So I have selected the Brilliant Dental with the Vision and the Latitude plan. And once I do that, if I click on this view details, it'll take me to the next page, including a summary of what I have selected. Now notice here, because this is an Epic plan, I have that supplemental accident rider to add on if I choose. Make sure if they do not want it, do not click the button once the application is submitted. We can't remove that benefit. We also cannot add it. Same for prescription coverage. If they selected the wrong one, whether with or without the coverage, you would have to cancel that policy and rewrite it. The right-hand side gives you the summary. If you need to change the dates of the coverage, you would click on this edit button. So I mentioned that a policy can be written for as little as 30 days of coverage. That's the minimum number of days of coverage. Here, what you would need to do is you would start out with 180 day coverage period. Then you can edit the end date and bring it back as low as 30 days of coverage. Make sure you hit save so that it'll store that. If not, it will go through as a 6-month policy. The supplemental or ancillary product premiums are broken out because it is going to be 3 separate charges. And I apologize, this is an error here. I have the latitude screenshotted twice. But the reason for breaking it out is, again, they're going to be charged 3 separate premiums because each policy is individual. This example is a 48-year-old. So when the short-term medical plan ends, she can keep that dental plan forever. And this latitude plan, again, can be kept till she turns 65. If you wanted to um, send this over to the client with the additional coverages that you selected for them, you can do an email this quote. It opens up a window. It allows you to fill in the client's name, their email address. You will receive a copy of the email that you sent. The site will not store the quote, but you'll get a copy of what was sent to them. That email will have live links in it. They can view the details, view the brochure, or they can actually start the application process, even if they don't let you know. If they submit it, you will get a notification confirming that your client enrolled in a policy as soon as they get their welcome email. And almost immediately, you'll see that policy in your book of business. Just a reminder, simplified underwriting. If they click yes on any of the application questions, the system will stop them immediately and let them know that they are not eligible for coverage, and it'll refer them back to you. Again, no tobacco use question on our application, no height and weight chart, just the weight limitation. 250 pounds is the maximum for a female, 300 pounds is the maximum for a male. No social security number required. And once they complete the application questions, they will be able to go. And here they have to complete their contact information. Email address is mandatory on this page because all communication regarding their plan is going to be electronic. We do not mail out ID cards or policy documents. If a client insists on receiving something in the mail, you want to make sure that you warn them that they are not going to be a hard ID card. It is going to be a paper printed uh, copy, just like you or I could download off of the computer in PDF. That whatever method of payment is used to submit the application, it's going to get charged immediately. And then keep in mind that is going to be the same method of payment that we're going to use each month. There is no paper billing. They can pay with credit card or ACH. If they need to change or update their payment information, they would need to call into client services and have that updated.
Letty, can I stop you for just a second? Would you mind going one back?
Sure,
I want to see thank you.
absolutely. Is that good?
I'm good. Thanks so much.
No, you're very welcome. And then once they complete this portion of the application process, they have to sign off on the disclosures. Keep in mind, they do get a 10-day free look, which means if they change their mind for any reason, they don't have to have a specific reason for canceling. If they cancel within those first 10 days, they will get a full refund, including their application fee. It's a click to sign. There is no way to email the application at this point of the process. So if they want to sign off on it themselves, you would have to create the quote and email it over to them, and they would go through all the questions on their own. It is an electronic signature only. And for all states, the applicant is the only required electronic signature. In the state of Pennsylvania, we do have a state-specific Epic base plan. In that state, you're not going to have that supplemental accident rider to offer. And then you also cannot submit the application on behalf of your client. The state of Pennsylvania requires that the agent assisted applications are not permissible. And also, if there was a spouse signing up in Pennsylvania, there would be an additional electronic signature spot for that spouse. And I'm going to keep up my information here because I want to make sure everyone has my contact information. and then I'm going to open it up. Lynn, do you want to take it
Yeah.
open for questions or comments?
Yeah, Letty, thank you. We do have a few questions, and I just wanted to make a point that you had just mentioned that the quotes do not save in your broker portal. So, you know, since you get a copy of that quote on your email, just always make sure to keep those handy. So, you know, sometimes I send out quotes and then the person gets back with me a week or two later, or I follow up and, you know, you can't go into your portal to find the quote. So, you know, just do a search because it'll CC their email on the email you get. So as long as you have that client's email, you can go in and, you know, save those or figure out what your system is. But a lot of times I have to go back and find that quote and then just enroll from that link or you know, resend it to them. So Jill had a couple of questions. So one is, Letty, once the child under 6 months ages out, can the parent then drop the policy so only the child is on it?
Yes, they can. So they can remove themselves from the policy once the child is 6 months of age.
So does that require a new application if the parent is primary?
No.
Okay.
Nope, we can remove them.
Okay. And can the
leave the
agent?
policy as is.
Okay. And what's the process for that? Does the can the agent request that in an email, or do
Yes.
they need to call?
That they can send over an email. They can send it to me, or we could send it to member services, and they'll remove it, and they'll also let you know what their new premium will be once they've removed the adults off of it.
Okay, great. That just is so easy that y'all let us do it that way. It's amazing.
Yeah.
And then Jill's other question is the supplemental accident rider with the Epic base plan. Will that terminate along with the short-term medical plan when it terminates?
Yes. So that is not a standalone. It is tied specifically to that Epic plan. So it can only be used while the Epic plan is in force.
Okay, but if they
Unlike
do the latitude
Right.
stays in place if
That's
since
correct.
that's a separate
Yes.
policy.
Correct.
Okay. Yeah. Okay. Well, great. I think that's everything. Letty, thank you always. You do such
No.
a thorough job, and
Yeah, I
it's
appreciate
just
that.
great doing business with Pivot, and we appreciate all that you do to help our agents.
My pleasure.
I'm so sorry. Before we let Letty go, I'm just going to be a little question hog here.
Yeah, go right ahead.
Letty, in your opinion, what is probably the most utilized plan selection, especially here in Texas?
The choice plan still till today, even with the newer products that we have added onto the portfolio. So the choice plan with a $5,000 deductible and $1 million total coverage is still our most popular plan. So let's talk about Texas for a minute, which I didn't mention. So quantum plans with that Cigna PPO and the Epic PPO are not going to be available in Texas. Something to do with the specific network and not working well there for whatever reason. So those were not approved in that state. So they're all going to be your open access plans. You do have access to that core plan with the First Health Network, but keep in mind the core plan is the one with those hospitalization limitations in there.
Yeah, on my sales in Texas and throughout the country, definitely that choice plan always seems to be the best bang for the buck. You know, it gives them a few doctor's visits, and
Right.
Price wise, it's not usually too far off from some of the ones that don't include the doctor's visits. So I like that plan a lot.
Good.
Great. All right. Well, thanks again, everyone, for being here. And we will have another webinar next Monday at 2 o'clock. And we'll see Letty probably in 2 weeks.
Yep, that sounds good. Thank you,
All right.
everyone.
Thanks, everybody.
Thank
Have
you
a
all.
great week.
All right,
Bye-bye.
bye-bye.